everybody, my name's Nicola and welcome back to my channel. This is the Frugal Cottage, where we talk all things money to help you on your financial journey. Today's video is all about my FreeTrade portfolio update for January. Don't forget to like and subscribe and let's get started. So I haven't done a FreeTrade update now for about a month, so I thought I'd update you on what my experimental portfolio looks like. And before I get started, I just thought I'd point out that there is a referral link in the description box below. If you haven't got an account with FreeTrade, if you go via the referral link in the description box, you would get a free share worth up to £200 in value if you join up via the link, and I would get one as well, but it's there for you if you don't have one already. But this is my FreeTrade portfolio as it looks today. Okay, so as you can see here, this is my portfolio. And it's currently, at the time of filming, we're £285.87, so it's creeping up nicely. It's nearly at the £300 mark, which is exciting. Considering this is the experimental portfolio, so I put £10 a week into this. It kind of ticks along nicely, and as you can see there, it's up in the green for now. So if I scroll down, I will share with you what my current investments are, what they're worth, and how they're looking in terms of what they are averaging, if they're going up and down, and that kind of thing. So if I scroll down, you can see there, so let's talk about Fiverr. So Fiverr is the one that's the biggest holding in my FreeTrade portfolio at the moment. So Fiverr is one of the ones that I bought first as well. And as you can see there, I have 0.386 of a share and it's plus 64% at the moment. So they've gone up in value quite a lot since I started. The last time I bought a share in Fiverr, you can see there, is December the 18th, and it cost me £10 and a penny. And that bought me 0.0664 of a share there. But I really like Fiverr as a company. You can see like their overall growth is huge. Over the past year alone, it's gone 855% in growth. So yeah, I like that as a kind of steady, fairly stable holding in my portfolio. So I would just grow that as and when I add some money there. The next one I'm going to talk about is Tesla. Everybody in the world has heard of this now, it feels like, and this is again just a tiny amount compared to what they're worth. But if you look, in the past year they've grown by 654%. As also all of the companies that I have in this portfolio, you can see, are kind of growth stocks, so they don't necessarily pay dividends. In fact, I think only one of them does. I've bought these particularly for their growth. Obviously past performance doesn't indicate future performance, but it's kind of, yeah, we'll wait and see. And of course, when I talk about all these things, this is not a personal recommendation, this is just what I'm doing in my own portfolio. So I will scroll down there, you can see I've got 0.101 of a share, and my investment in those has gone up 67%, which is fantastic. And the last time I bought some is the 8th of January, I put in £9.90 there. So that, again, that's one of my £10 per week additions there. And then the next one is Apple. So Apple actually has gone down, it's gone down $1 in the last 30 days, but overall, again, you can see now their growth isn't as big, nowhere near as big actually, if you look at that, but it's still upwards, it's still the green, so that's okay. And I have 0.63 of a share there, and the last time I bought some of these was the 15th of January, so last week I bought £10 worth in Apple, and I think Apple's the one, yeah, Apple's the one in my portfolio that pays a dividend. Now this experimental portfolio with FreeTrade is not dividend focused in the slices. This just happens to pay one. I've got Apple as a growth stock, not for dividend, and you can see there their dividend yield is 0.64. So if I was looking at dividend yield and dividend income paying stocks, Apple wouldn't be one for that reason. However, I've got it because it's a growth stock and I'm hoping that it will continue to go up in value. The next kind of four are all minus, as you can see there. So the next one is Amazon. I've got £40 worth at the moment, and they've gone down $101 per share in the last 30 days, but considering that their share price is so massive anyway, it doesn't particularly worry me. Again, if you look at the last year and the growth there, that's what kind of you're hoping for as a growth stock as it goes up. So I have 0.017 of a share, and it's actually down 4.28%. Not particularly worried. The last time I bought an Amazon share was back on the 20th of November, you can see there, for £10, and we're just holding these and seeing what happens. Netflix is one that I bought kind of to begin with, and you can see that actually if you look per month it doesn't look great, but then if you go per year it looks okay. but I haven't bought one of these. Oh, so the last time I bought Netflix was in the 11th of December. Again, can you see that it's kind of in £10 increments? That's because I put in £10 a week into this portfolio. And again, they don't pay a dividend either. Zoom was doing really well, and then it kind of just all went a bit. Can you see there's a peak there, and it's kind of dipped again since that peak, but again, overall it should be okay. I haven't added anything to this since October, so it's just kind of, and look, if you can see there, so it's minus 19.21%, which sounds like a lot, but then £3.84 isn't particularly a lot, but that's because it's kind of dipped. But we'll see. Everybody knows about Zoom now, so you think overall, like, so long as their business model can sustain people paying for the service, then that should be okay. And then the final one in this Britvic share is the only UK based stock I have in this, and actually this was a free share, so thank you if it was you that signed up via my link. And it's worth £7.60 at the moment, and I have 1 share of those. And do they pay? Actually, they pay a dividend, but again, that was a free share, and I haven't sold it just because it's gone down, so I'll just wait until it goes back up, and then I might sell that and put it into something else, because this portfolio is not to do dividends, and it actually doesn't have UK stocks in there either. So if I go back to the starting page, you can see there, so yeah, I'm nearly at £300, which is exciting. That's kind of like a little milestone to get. And over time, you can see the growth there is definitely positive. It's definitely in the right direction, and will continue to grow, hopefully, as I continue this kind of experimental portfolio. So that is my FreeTrade portfolio update for January, and as I said, if you haven't got one of these accounts already, I'll leave in the description box below a link so that you can get a free share worth up to £200 if you would like it. Now, I'm happy with how that looks. That £10 a week strategy is what I'm going to continue with at the moment. As opposed to my Trading 212 portfolio, I prefer the Trading 212 platform. I think it's easier and it's better designed, but this will do the job for now. This absolutely is doing what it's intended to do. It's a very small consistently every week, and it will grow over time. And I'm looking forward to kind of saying in like a year's time what it looks like, or maybe 2 years' time, and I'm kind of seeing the growth there. Because hopefully with the companies that I've chosen, and again, these are not recommendations, you have to do your own research, but hopefully with the companies I've chosen, the growth will be there. And will leave us with quite a nice lump sum when we decide to sell. Have you got an experimental portfolio? How are yours doing? What does yours look like at the moment? Let me know in the comments below. As always, thank you for watching. Don't forget to like and subscribe, and I will see you again very soon.